thanks for joining me on my market report. My name is Mike, and if you're new to my channel or my videos, know that my videos are on mortgage rates. We kind of get into what's impacting mortgage rates on a daily basis. It could be something from headline news to uh, could be something from economic data, could be something from geopolitical. We're here to kind of explain the back end of it and hopefully give you a little bit more understanding as to where the direction of where rates are going, whether it's going upwards or downwards or kind of kicking sideways. If you're in the real estate side of things, might be a good way for you to follow along with where the markets are moving. If you're in the consumer looking to refinance or looking to buy a home, and you're probably kind of keeping your eyes on rates, this will hopefully give you some information as to whether to maybe lock in or hold off a little bit. Hopefully, these will give you some good information moving forward. A little bit about myself is I am a loan officer. I do work with the national lender, so we do loans in all 50 states. So we're certainly here to help you out if you're looking to refinance or purchase in any state here in the U.S. So please give us a shout. We're here to answer any questions you might have. If you got questions about different loan programs or mortgage trades or the process or whatnot, we're here to help you guys out as well. So please feel free to reach out. Best way to reach us is in the initial meeting would be just to contact us through the social media site that you found us at. So without further ado, why don't we jump right into our market report, and we'll start off with economic data. Today we got a couple HPIs, which stands for home price indexes. So we'll start off with the Case-Shiller. This constitutes the 20 largest cities in the U.S. and it's month over month for the month of October. So its September reading came in at 1% month over month. Forecast is come for 0.9%. It came in at forecast at 0.9%. However, it's year over year went from 19.1% in September, and forecast come for a slight downturn to 18.5. It came to 18.4. So it's still a very good number. It's just trying to slow down. Home prices are still rising. It's just at a slower pace is what that means. So unfortunately, a lot of people, when we start seeing home prices, we see these turn where things slow down. People mistake that home prices are coming down. They're not coming down. It just means that it's coming at a slower pace right now. We also got the FHFA home price. This is brought to you by FHFA, who does the conforming limits, and these are for conforming loans on homes across the U.S. And this is their index. So month over month, it went up 0.9% back in September, and it climbed 1.1% in October, and then went from 17.7% year over year down to 17.4%. So a slight downturn. And these are also very good news because first-time home buyers were having a hard time competing with these, so this might give them a better chance to apply and get offers accepted and create more affordability for first-time home buyers. Last but not least, we had the 5-year note auction earlier today, and I'll show you the effect of that in a bit. It wasn't too great. It was a kind of a soft one, primarily because it is the holiday season, so we don't really have a whole lot of the big hedge funds and them out there buying at this time. So we'll probably have a better inclination next month when we see these auctions. But during the holiday season, it just these are soft. So speaking of such, why don't we jump over here to the mortgage-backed securities? We're up currently about 6 basis points. As you can see, we were higher, breaking above the 25-day moving average, but we did pull back a little bit. But we did start the morning off even lower, which rose. So when we had the lower raise, so the East Coast people who come out start the day sooner, had their rate sheets out sooner, came out a little worse pricing. But as the market improved, so did their pricing, and our pricing should be very similar to what we saw after yesterday's close here as a result. So here's the impact of that. So that came in about 10 o'clock, and right around 10 o'clock here, as you can see here, it started to kind of drop a little bit. So it had a little bit of impact there, not a huge impact, but it did pull off from its earlier highs. As you can see, it's been kind of this sideways pattern since then. We don't expect a lot of volatility. I mean, we expect some volatility, but just not a lot out there, primarily because we just got a lot. The markets are a little liquid. The volumes are down because, again, the big hedge fund, the ones who accumulate a lot, do the most trading, are out these 2 weeks. And so next week we'll probably start seeing it pick up again. and get a little bit more realistic market indications. But right now it's up 6 basis points, which basically translates to unchanged levels for us on the West Coast, and then of course after the reprice changes on the East Coast, unchanged levels from what we saw yesterday's close here. All right, so that's pretty close to the wrap. So we'll take a look at the national average for conforming limits. The 30 came in at 3.27, so worsened a little bit. And this came in at 15 came in at 2.61. Again, that one also worsened a little bit too. They do have points built in, and again, to talk about rates, there's no one size fits all. If you followed my videos in the past, you'll know what variables affect mortgage rates and why. It's kind of impossible to say that one rate quote to one person is not going to be the same to another person. Why they may not be the same. So, anyways, if you guys got questions about that, if you guys want to talk about those rates, please reach out to me. I'm here, and we can certainly provide that information to you guys. If you guys like these videos, please smash that like button. It certainly helps our video out, and share. We greatly appreciate you guys. And other than that, please again, we'll look forward to see you guys tomorrow. Thanks so much for watching. Bye bye.